Folks, we're in the midst of third quarter earnings. They're coming out. In fact, dozens of companies reporting before and after the bell. Alcoa, Blackstone, Ericsson, they all topped the numbers this morning. Beat the street. Guidance was really strong coming into the week. We have financial releases, and they lived up to the hype. But the hype, maybe that bar just wasn't high enough because, a few companies have blown away Wall Street, even though they've blown away the estimates. Adam Johnson is back with me to discuss. Adam, coming into the last week, everyone was saying, well, don't worry about this market volatility. Don't worry about the anxiety associated with it because earnings to the rescue. Yes. Earnings are here. We're getting hit worse. And it's not like they haven't delivered. So what's going on?
So I tell you what I think's happening here is that, we had a real scare, right? Last week to lose 1,500 Dow points in 2.5 days. That's scary. And I think before people are willing to come back in and actually buy this thing, they kind of want to retest it. I hate to say that, but I think that's what's happening. I think we're caught up in a global...
What, the low from last week?
The low from last week, which is still about another 150 to 200 points lower. I'd really rather not see us go there, but you know what? At that point, it's not that much farther. So if we can go down, retest it, and get people to come back in and buy it, as I look at my own name, my own portfolio, there are so many stocks that are now they're jumping out. I mean, the S&P is trading under 16
I say
times.
that to myself, too, even though I'm down on some stocks 25%. And, you scratch your head and you say, golly, these stocks look amazing.
Yeah.
Let's talk about what's really happening here, because the media focuses on a trade war. I think they've really have miscalculated the trade war.
Well, remember, the media will do anything in its power to discredit the White House, the gentleman behind the Resolute desk.
And I believe that plays a big role in it. But from the mouth of corporate America, this is what we're hearing coming into the week from companies that have reported. Overwhelmingly, they're complaining about currency. The dollar is too strong. Then they say raw material costs are to the roof, wages are higher, and then tariffs come in number 4. Of these areas here, none of these are going to get better, perhaps. Maybe the dollar may come down.
No, I think, and again, I'm an optimist, and I take plenty of heat on Twitter for being an optimist and a guy, a guy who says the cup is half full. But what actually matters more to me than those headwinds is what's happening on the top line. We can talk about earnings, but Charles, if you look at sales, right, top line sales, money coming through the doors of U.S. companies, it's up 8 to 10, in some cases 11 and 12%. That's a powerful statement. So, yes, absolutely, it hurts the margins, the profitability, that is. When you've got rising wages, you've got rising financing costs, when you've got headwinds from the dollar going up. But if you've got more money coming through the door because you're selling more, because we have the most number of Americans working ever, because GDP is rising 4.2%, that's a powerful story. Earnings and employment, that's actually what I'm focused on much more.
Ultimately, that will dictate where these stocks eventually go.
I think so, and I think we're just caught up in a macro trade and a technical retest right now, but I am buying. I've been telling my guys to buy. I'm taking a little heat. But that is honestly what I mean. Focus on the long term.
Just so the audience knows, coming into this week on earnings, 69% of the companies beat on the top line. Adam's talking about 86% have beat on earnings. Adam, thank you very much.
Thanks, Charles.